Right. So, in this video, I'm gonna actually talk a little bit more about art of buying a business, right? So, in the previous episode, I just gave you guys like a high-level overview on the three key aspects or the key ideas to actually leverage in making over 200K every year. So, but in this particular video, I'll be kind of talking about on another high level because again, I don't want to overwhelm you guys, because everything has stages. But this particular video is going to be focusing more on buying business and the process that is actually involved in actually doing this, right? So you guys ready? There are like key 5 steps or processes that you need to go through in order for you to become a new business owner, like a new business acquirer. So the first step is actually the initial meeting. So this initial meeting, you need to first of all source the deal, right? You can source the deal in 2 different ways or more than 2 different ways, but at least the 2 main ways that is known right now is either reaching out to the company or to the business owner directly or going with a broker, like a business broker. So once that particular initial stage is actually completed, the next step is to meet with the business owner and be able to like have a chit chat. It's more like a 30 to 1 hour kind of meeting to see if it's a good fit, right? You talk to the business owner, you guys actually kind of talk together to see if there's a synergy between you guys. You ask questions about the business, and mind you, before then, if you're going through a business broker, like you may have received what is known as the confidential information memorandum. That's like the SIM. All right. So, and this SIM contains information about the business. It's talking about like the financials, the last 3 years financials of the business, last 3 years profit and loss statement, because basically you are evaluating the business itself based on its financials, right? Based off of its profitability. So once you are able to actually get that, nailed down, then, that will actually further your interest in moving further to either communicating with the business owner and then moving from there to the next step, which is overviewing the financials again, because initially you just went through it maybe on the fly, but you want to actually go through that financials again and evaluate the business and then be able to actually compare it with the current market comparisons, like based off how much businesses that are within that ballpark. Say for instance, if it's like $1 million business, or even like $500,000 revenue type of business, you want to actually go online and research to know what that business is actually worth, right? And then come up with a particular number that you're going to make an offer with, which is the next stage, the 3rd stage now, which is actually making an offer, right? So you actually make an offer in a form of what is known as a letter of intent. So the letter of intent basically entails like how much you're looking to actually purchase the business for, the purchase price, and then the terms. Say for instance, the business is sold for like 500,000, or let's say the business was actually put online, or the seller is looking to sell the business for like $1 million, and you're coming in being like, you've gone through the whole financials and you'll think the business is worth 850. That will be a purchase price, right? So, and then after you put that as a purchase price, you're gonna actually let the seller know within that letter of intent how much you're willing to put down as a down payment, unless you have the full cash, right? I mean, if you have an Uncle Sam or something like that, then you probably won't actually pay it all off. So anyways, yeah, you just put in how much you are actually going to put down. Typically the typical amount nowadays is like 10 to 20% down or more than that, right? But at least you want to put a substantial amount down so that way you can have less money to less balance to actually pay in that later on, which is known as the seller financing. But we're actually going to talk about later on that. So but anyway, after you make an offer, right, you're just gonna have, like I actually said, the number, how much you're gonna pay upfront, and then the terms, right? You can actually say, okay, I'm gonna hey Mr. Seller, I'm gonna actually give you like $20,000 down, and then the rest of it I'm gonna actually finance it over a number of years, right? So with an interest or with no interest. And then after that, the next stage there would be to send that offer over to the seller or through the business broker. All right, so and then the seller will have a period of time to actually review the letter of intent, because mind you, you're not the only buyer that is actually requesting or actually inquiring about this business. There's other buyers out there that's actually looking to buy the same business. So you want to make your letter of intent stand out a little bit based off of your purchase price and the term that you're actually trying to go with. So once the seller actually agrees upon, or once you guys agree upon a number or a particular term, right, then the next stage there would be the due diligence phase. So typically what happens within the due diligence phase is the buyer, yourself mostly, will actually go in and actually do some sort of due diligence on the business, come to the business, or maybe look deeper into their financials, maybe look at their the tax returns, which is the corporate tax returns. Have some sort of interview with the employees, right? And, sort of, make sure that the business is actually in good standing. There's no pending lawsuits against the business or anything like that. So you want to make sure that you do your due diligence and carry it out. Most people actually involve like a third party to do the due diligence for them. Because again, there's some things you might miss. Well, unless it's like a small business, like a business that's actually bringing in maybe 400K every year. So that might be a very, very little, no minimal, due diligence that needs to be done on that type of business. And then, if everything checks out and you're happy with the business at that stage, then the next stage would be, the closing. And usually before the closing, once you've actually, notified the other party that you're interested to move forward with a deal, you will need to like now put in the money that you actually, offered, especially the down payment. You can have to put it in an escrow. So basically the escrow, what it is like, it's actually a service. Like it serves as a middleman between a buyer and the seller. It holds the money, just in case, anything falls off the grid, the buyer will actually get the money back. Or if everything moves done, like, if the process very smoothly, then, the escrow will release the money to the seller. So, and then after that, the last stage would be mostly the closing. So yeah, that's the final stage, which is the closing. And congratulations, you just bought yourself a new business, right? You are now a business owner. Now, you actually, as an entrepreneur, kind of fast-tracked it such that you jumped out the typical, starting from scratch, trying to build a business, test the market and everything. Now you're buying an already existing working business. Like it has already the customer base and everything. So you just need to do marketing, a lot of marketing for you to be able to actually scale it up, right? So, but yeah, that is pretty much the typical stages or processes that is actually involved in owning a business. First of all, like I said, do the initial meeting, but before the initial meeting, you have to look at the financials, the books, right? But you can still look at the books after doing the initial meeting. So which comes down to reviewing the financials, the second stage. And then the third stage in there would be making an offer, right? And after making the offer, the next stage there would be the due diligence. And after that due diligence, the next stage would be the closing. And pretty much that is it. You own a business. How awesome is that? All right, guys, that's it for today. And I'll meet you guys in the next episode. Peace.